So we'll do a simulation. Go through here, and we'll do gold simulation. Starting capital, we'll do 10,000. Start date, we'll do, let's do like November 13th. No, what? Hold on. This is Tuesday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday. So let's do 13th November. And take data here. All right, start. All right, here we are. Simulation. Oh, this thing is already moving. $30 minutes. Okay. All right, template. Now, one thing with the simulator, with CTrader, is that you don't get to choose different time frames, right? So the only time we have here is the 30-minute time frame. So what we're going to do is, let's zoom in here. How do you use this MacBook? Hold on. Let's do this. All right, like this. Okay, so 12, 1, 2, 3. So around 12, we have London open. So we will skip to the next London open. What's happening here? Is it playing?
I think when I change the time frame here, it will get stuck. Close and choose one second.
What?
You have to choose on 30 minutes.
Here?
No. When you started, you chose H1, right?
No, it should still work, right?
Sometimes it does not work.
All right, let's do this.
This is H1.
Where does it say H1?
No. See,
Oh, okay. I see, right here. Ah, interesting. All right, see, I'm still new. All right, $10,000. We're going to go back to November 13th. Start date is going to be that here.
choose the other one. Accurate one. M1 Barcelona server. The other one is accurate. Tick.
All right. Okay, loading. The MT5 app, I removed it. MT5 gone. Okay, here we go. Okay, we got a gap over here. Bring this here. Let's stop. And so what we're going to do is, this is midnight. Okay, midnight, and this time frame is +4, which means it's midnight Dubai time. So we will start from pre-London. Pre-London in Dubai time is 10 a.m. 10 a.m. Dubai time. 10 a.m. Dubai time. So awesome. So we have this time right over here. We're going to move over to, let's play, next. Okay, forward. So this is 10 p.m. Keep forwarding. Okay, we got the time right over here. See this? Oh yeah, we got the time right there. And this is 1 a.m. So this is pre-London now, right? So if you look at the time, this says 10 a.m. 10 a.m. in Dubai is around 2 hours before London opens, right? So what's the first thing that we do when we're looking at this chart right over here? First thing we need to identify are, yes, support and resistances, right? So that we can see are right over here. Let's say we have our resistance. So we're going to draw this resistance right here. And let's do this. Make it gray. Awesome. Let's change this here as well. Perfect. So we got our resistance right at this point, right? So if we're looking at the 30 minutes, so we're only going to be looking at the 30-minute candles because we want to good at doing candle confirmations. So if we're looking at the 30-minute candle, what's one thing that we can see where price is at this point? Resistance, right? Resistance. We got a resistance right here. Now, if we want to take a buy, what's the probability that price can continue to push up from this resistance area? Is the probability high or is the probability low? Low, right? So if you were looking at this, what are you most likely to do at this point? Yeah, we'll wait. We'll wait for some sort of a retracement, or the best thing would be, now if we look at this price, what we can see is that we basically created a support right over here. And this support is, now we got to measure the support. This is a 62 pip range right over here. So the best case would be, so whenever you are approached with a position where price reaches some sort of a resistance area, the best thing to do is to wait to see if price will retrace, create support, and then continue to move up or not. That's the best case scenario at this point. So what we will do is we will slow this down and we will play it, and we want to see if we can create some sort of a support at this point, and then if we can continue to move up or not. So let's see over here. Let's speed it up here a little bit. Let's bring it up towards this area. You can also look at the time. So whenever you're doing simulations, the most important thing is to look at the time right over here. This looking at time is very, very important. Hold on, what's the date over here? 26th February, okay. All right, see right now, so we are retracing, which is good. Now we need some sort of support to form. Once we can form that support, then I think there's going to be a very good idea where price can continue to move up. The candle is also about to close. You can look at the time. We have literally 10 minutes left. 3 minutes, 3, 2, 1, and there you go. The 30-minute candle has closed right over here, right? So if we zoom in more, this is how I like to look at the charts, like this, and let's zoom in over here. This is how I like to look at it. Now, you can see how we had a big candle that came down, right? We had a big candle came down, and now the body of the candle is becoming smaller right over here. So as the body of the candle is becoming smaller, this means the volume to go down is also decreasing, right?
I have not taken a sell over there.
Where?
Just second bearish candle.
Right here? Okay.
Taken that by
So why didn't I take a sell right here as this candle came down on this one? Okay, I'm looking for something else.
stop loss is high.
Stop loss is too big, right? Because if I would have taken a sell right over here, the stop loss would have been, like 25, 26 pips. It makes no sense at all. So I guess we'll have to wait some more because pre-London right now, there's like nothing happening at this point. Also, and you guys are also right, that the trend is bullish. So we're waiting to see whether we will create a support. If we create support, then we can take a buy. If we create support and break support, then we can take a sell. So let's just wait and see. Oh, wow, look at that. Look at that candle right there. Right? Now this is a good candle. Right? We need to wait to see whether we will create a support or not. That's all what we're doing. Because this is pre-London, high volume, and we're slowly moving into London Open as well.
You're not taking any trade for
No, there's no confirmation. We're just waiting for a candle to close that we can identify as something that will go in our favor. That's all what we're doing. All right. Let's speed it up here a little bit more.
And that too is 30 minutes, yeah?
This is the 30-minute, yes. So the candle is forming and boom. Right now look, the candle has closed and looks like we have formed some sort of a support right here. Can we all agree that we formed a support? Right? Awesome. We formed a support. Now, now we have to measure the range. Now, can we take a buy right here as this candle is starting? Can we take a buy?
Yes, but my only concern would be that it closed.
There's no buts. Listen, and you know this. Whenever you're looking at a chart, and you think, okay, like, what, we have a good opportunity for a buy, right? You're like, okay, we have a good opportunity for a buy, or let's say you have a good opportunity for a sell, and then you're going to say, but. Whenever you say but, then there's no trade for you. Then don't even execute a trade. So over here, right? Now let's say we've only moved like in the first 1 minute, right? The candle has moved. What was your name? Hendrik. Hendrik, okay. So me and Hendrik were discussing. We were discussing that is it okay to take an impulse entry when price breaks the high in the first minute or whatever, right? So we've moved in the first minute up. So even if you take a buy right over here, the stop loss is going to be below the previous bullish candle, correct? But if we take a look at this body is smaller than the previous body, right? For me to be 100% confident that price is going to go up, I want this body to be at least bigger than the previous body. Then I can say, okay, like, I took a buy in an uptrend where this body was bigger, but also if I look at this candle right over here, this candle, look at the wick on this candle, right? This candle's wick is way bigger than the body. So this means that this is an exhaustion candle, right? An exhaustion candle means what? Yeah, there's a probability to go the other way, but what? No buys? Yeah, no buys. Because it's an exhaustion. Because look, you got to be able to tell the stories about candles. Like this candle, it tried to go up. At one point, this candle was super bullish, right? But now this candle is an exhaustion right over here. So, I mean, the only buy is going to be if we have another bullish confirmation here. And at the same time, you got to take a look at sells too. That if we break below the support, what's this range? 2026 to 2023, a 30 pip range, right? If we break below the support, we can have sells. If we close bullish body, some confirmation, then we can probably have buys. So whenever you're looking at a chart, you're looking at chart from two perspectives. What can make price go bearish and what can make price go bullish? You know, same thing like Fujitsu, right? Like there's multiple variations to different things. Like same thing right over here, but we just gotta wait. So we're gonna wait. If you can become a master at waiting, things will be very clear. Yes?
Waiting that above that resistance wasn't that was a consolidation and that move up was a right down.
Like right over here?
Yeah.
Here.
That resistance, the second resistance.
Which one? This one? I don't know. This one?
No, in the middle, there.
Oh, right here.
Yeah. Wasn't that the consolidation and then the move up was a breakout?
Yes, this was a breakout, right? And then we were expecting price to come down and create some support.
But it closed back in the range.
Yeah, exactly. So it closed now back in, oh, I see what you're saying. So what you're saying is that this right over here. Yes, exactly. So this was actually resistance. You're right. This was resistance. Price broke out. And then we were waiting to see if we're going to create some support, but we came back in and now, we're stuck where we are now. So let's do this. Let's play this. See what this 30-minute candle does. We just have to wait for the 30-minute candle to close. All right, so we got the candle about to close. Let's slow this speed down over here. See how this candle closes. All right. Oh, wow, look at that. We are breaking below this low. Speed it up here a little bit. And let's forward this candle. Okay, now look where we've closed. Now, if someone came in from outside and they said, hey, you guys have been in this for like 2 hours now. You guys must be professionals. Where do you think price is most likely to go? Someone here who thinks up from here? No, right? And can someone explain me the analysis why they think price can go down from here? Okay. Yeah. And also, yes, also this candle has closed and broken below this support. Right? The candle has closed and broken below the support. So now there's a higher probability. Okay, so can the next candle just go up? What's the probability that the next candle can go up versus going down? Going down is higher, obviously, that we can see. Right? So we're like, perfect. We know it's going to be a sell. Now, there are some things that go through our mind, which we can say that, okay, we know it's going to be a sell, but so whenever we think about buts, we start to incorporate negatives in our analysis, right? We say, but this range is this, but there's this wick, but there's this wick right here, but the sun is on the other side, or I didn't park my car right, or I don't think it's going to work, right? No. If you think it's going to be a sell, go in with a smaller lot size, right? So what we're going to do is, we'll take a sell. How much money we have over here? $10,000. Okay. So we'll go with, one lot. We'll go with the sell, execute the sell. Stop loss is going to go above the previous candle. It's a 16 pip stop loss, right? And the TP, we can maybe bring it somewhere over here, whatever, right? Okay. Our trade is set. The analysis is set. Simple. Now we're going to let it play. Okay. So this time is 12. This is actually London Open right over here. Okay, we are 2 minutes in. Awesome, look at that. We are about 7 pips, 8 pips. And this candle, 15-minute candle is about to close. This candle will also close. We'll see how this candle closes. Are we going to continue moving down or are we going to retrace? The main idea is to let the candle close. Now look, the candle has closed bearish below this area, so there's a very high probability that the next candle can continue to push down.
Question here.
Yeah. Yeah. Yeah, but still we have a range. Look at this range. This is a 28 pip range, right? It's a 28 pip range. We tried to go up with this wick right over here, but we couldn't. So we broke below the low. The rule of the market is simple, right? And the rule of the market is this. If we tried to go bullish, and if we could not go bullish, and if there was a rejection wick right here, and if we fulfilled the conditions of a bearish move, then there's a very high probability we're going to go down. You know, if we couldn't go bullish, then where else are we going to go? We're going to go down, right? And once this candle has formed, I understand this is where you can be like, oh, you know, it's just an exhaustion candle, whatever. Totally simple. The solution is this. What you do is, you go to your stop loss, you bring it above the high of the previous candle right over here. That's it. Because if price goes the opposite way, what are you going to lose? You're going to lose $59, you know, versus what were you losing? You were losing like 160 something, right? So you're going to lose $59. You're like, okay, perfect, no problem. Now when we take a look at this candle right here, this candle has broken the low of the previous candle, right? So now it has even a higher probability to go down. I hope the price doesn't embarrass me here, but we'll see. You know, so, I mean, the candle is about to close here soon as well, so we'll see how the candle closes. And at least, like, you know, oh yeah, okay, perfect. Oh wow, look at that. We continue to move further down over there. Right, so let's go to history. And yeah, boom, that was the trade right there. And entered right here. After perfect confirmations, we broke below support. We understood what's the direction. And direction is down, and we executed on it. Simple move. Clean range to the left hand side, work like a charm. Any issues in this? Okay.
Now I understood why I told it is fluctuating like hairwire thing. Because I would have taken sell on the second bearish candle. It went up.
Oh, you would have taken a sell right here?
No, earlier itself.
Oh, right here.
Yeah, and it will go hit my stop loss and it will come down.
Yeah. Yeah, so the main thing is you have to wait for confirmations. You have to wait for the candle to print in the way that you want, right? Like taking a sell after this candle makes no sense. If you wanted to take a sell, you should have taken a sell up over there. Because the thing is, you have to respect yourself as a trader that you will only take a good entry. You know, so like, look, we already moved, how much will this move? We already moved fucking 25 pips from all the way up over there, right? So why eat leftovers right over here when you could have had a full buffet from up over there? Like, that's what I say. So if we closed below this support, perfect. You have clean range to your left hand side, your stop is over there, and then, yeah. So never take a sell after the move has been done. You know, if a candle has moved 20 to 25 pips, traditionally don't take that sell or don't take that buy, because there's a high probability you're going to get stuck in retracement. There's a high probability you're going to, like, you know, this thing is going to happen and then you're going to be like, oh, what's going on over here? You know, I was trying to take a sell, you'll close that sell, price will go down, you'll say, oh man, you know. Then someone in your corner will say, oh, hey, look, I took that sell. And then,
I would have taken the buy also, next.
oh, yeah. But from now on, we're not going to do that. No, just one. Okay. All right, here we are. We have pre-London, and what pre-London is doing is we are creating some sort of a support, right? Before this candle happened, we broke below the support, and now we're below this area. At the same time, we're also creating a resistance up over here. So what are we looking at now? What's the highest probability that what can happen now? Sell? Okay. Yeah, it's a big range. So if you do take a sell, where do you think your stop loss is going to be? No sell. Because this stop loss is going to be, you know, like 17, 18, like it's a huge candle that came out of the range, you know. Yeah. Oh, so you want to take a sell? Now? At the retest. Okay, awesome. We'll do that. So at this point, all we can do is just wait, right? We're waiting for any solid opportunity that we see based on the candles. So we'll wait.
Just one question. What happens like if this sometimes it just goes down, right? It doesn't let you, so you miss those opportunities, right?
Yeah. You miss them. Like if you miss an opportunity, you basically miss an opportunity. There's nothing much that you can do. So yeah, let's see.
I've seen lately that as soon as the breakout of the move, like normally London open and then normally when it breaks out of the move to the
Oh, like after breakout, it just moves. Yeah, that happens too. Like something that happening right over here. Now look at that. Candle is moving down and we're like, okay, fine. You would have taken the trade? Okay. Well, the key, here's the key. I'm going to tell you the key now. The key is, once it retraced, you should have told us you're taking the trade. Yeah. So what we're doing is, we're only looking at candle confirmations. That's all what we're looking at. We're not doing any cowboy trades. No. Only candle confirmations. That's it. So we're just patiently waiting. Patiently waiting. Because, what's his name? Warren Buffett said that money goes from the impatient to the patient. So we're just waiting. Waiting for some sign, some signal. I mean, if we can close bullish, this is a 28 pip range. So let's see. Slow it down, fast it up a little bit. We got 10 simulation seconds left.
With that bullish line on the left, would you have dropped down to the 15-minute time frame?
Which one?
That last session's bullish run.
Oh, this one right here.
Yeah, would you have dropped down to 15? Because it forms support on 30, not twice.
Yeah, but that happened when I wasn't looking at the charts.
Are you looking at the very left one?
Which, this one?
No, left. Last session. Left, yeah, and down.
All right, hold on.
Sorry. Form support a couple times on the 30 minute.
Oh, right over here. Yeah, this happened, what time was this happened? This happened this happened after I'm not even looking at the charts. Yeah. So whatever move happens when you're not even looking at the charts, that's irrelevant.
Yeah, like for the
Yeah.
example, again,
Oh, yeah.
if that had happened in London, how would you navigate through it?
Yeah, I guess we'll never know. Because it didn't happen in London. It might not even happen in London at all. Right? Like, there are some different variations that may happen, but then, yeah, you're right. So whenever there's a lot of volume in the market, on the 30-minute, the candles are big, then I'm looking at the smaller 15-minute to see some sort of a market structure. All right, so here we are over here. What's happening here now? Now, do you think that this consolidation area would come into play in this current price action? Yes or no? Who says yes? No one. Who says, oh, yes? How?
Because it was, it's like a price that so many candles have touched and rebound, so it looks like it has strength.
Yeah.
I would be careful on it.
So here's the thing, right? So now, previously, we had our support right here. We all agree with this? Right? We had our support right here. This candle broke below support and continued to push down, right? So now we've created a new support down here. So what we got to do is, now we have to adjust our analysis based on the new information we have. The new information we have is a support formed right over here, right? So now if we have a support established, there's also some sort of a resistance somewhere. So now we got to identify that resistance. So where would that resistance be? Up over here, down over here, or up over here? Right here.
No, that's already retested, right? By going down.
That becomes resistance.
Already retested.
This is going to be the resistance, right? And the reason why this is not going to be resistance, because if this was supposed to be resistance, then this moving down, it would have reacted to this area. But this candle completely ignored it. This candle was like, oh yeah, oh you got a zone over there? Ah, fuck it, who cares? Went down. So now this becomes your resistance, because if, let's say, price starts to move up from this point, it's going to look at this resistance as sort of a zone. It's not going to look at this area, because it's going to say, well, my buddies here, they didn't care about this area, so why should I care about this area? I'm going to care about the area that's next to me, which is this resistance right here. So as you're looking at price action, as price is moving, you got to understand that your zones are constantly shifting. You have to refresh your zones, refresh your charts, refresh all your analysis. So, yeah, I mean, look, we have an uptrend, plus, look, there was a rejection right here. So if you were a betting man, what would you think where price would go from this point? What's the time? 11, 12, 1, 2. Yeah, around pre-London. Down? Let's take a sell for you. Why would it go down? The 30-minute candle is bullish. And if we measure this, this is 18, 19 pip range. It's a small range. So who thinks that the next candle will print bullish? Okay, 1, 2, 3, 4. 4 people think that the next candle will print bullish. So this means everyone else thinks the next candle will print bearish. Yeah? Why? No, you got to look at the facts. The facts are we move down, we create support on the 30-minute time frame. Right? So I'm not going to take a trade because this range is like, like 17, 18 pips. At this point, we're only getting good at identifying whether the next candle will print bullish or bearish after we have our confirmations. Right? That's it. So we'll play it. Right? As long as this candle doesn't break the low of the previous candle, it should print and stay, like bullish. See, it's moving and grooving. Let's speed it up here a little bit. Oh wow, look at that. Right? You have to identify based on the facts we have whether price will print bullish or bearish or that's the first step. Identifying whether the next candle will finish bullish or it will finish bearish and then go from there. But, oh, what happened here? Okay, it's still playing. The candle is about to close in 2-3 minutes. Oh, wow, look at that. Yeah, it was a nice one. So now we're back in the range. Price action here is, I don't think it's that good. So what we're going to do is in the next one, we're going to have a volunteer come up. Right? And then we're going to do it that way. So let's just see what happens right over here actually. This candle, we have London Open coming up. If you look at the time, we have 10 simulation minutes left. 6 simulation minutes left. And then let's see. Oh, there we go. This is now London Open. And now, look at that now. We have created resistance. It's London Open. I think we have a range from here. I think we have like a 26 pip range over here. Now, just by practice, do you think the next candle will close bearish or bullish? Because the previous candle on the 30-minute is bearish. We've created resistance. We have a range. So, yeah, let's take a sell. The stop loss is 12 pips. It's whatever stop loss, 12 pips. And we have a pretty big range over it. Even if we come down till 2033, this is still a 19 pip range. All right, let's try this. Stop loss goes up over here. We're looking at TP coming down towards 2033. And yeah, that's it. With the laws of the market and the rules of the market and the volume and the clean range to the left hand side, I think it should see now we've broken the low of the previous candle and we're coming down to the TP, and I think TP is going to get hit. Oh yes, look at that. So simple. You just have to wait for candles to print in a way that you can recognize. Man, trust me. Sometimes you're going to take. Still moving. Sometimes you're going to take a trade and you're going to be confused, right? You're going to be confused. You're not going to be sure, but you're still going to be in the trade. Those are the trades you should not take. Because I can guarantee you that when you take that confusing trade, price action, confused, you're going to lose that trade. Then after like an hour or so, you're going to look at the chart again and you're going to say, oh yes, this is now go where I think it's going to go, but I've already lost the trade. I'm low on confidence. I've overused my risk, so I'm not going to take this trade. And you will literally, you will watch that trade go exactly where you think it's going to go, and you will just sit and watch it. Yeah, it's going. Shit, man. It's going. And as that trade is done, you're going to enter the trade. And then you're going to lose because it's going to go the opposite way. So whenever you look at price action, and in the first 10 seconds, if you cannot decide where it's going to go, then that's not the trade for you to take. But if you know instantly in the first 5 to 10 seconds, I know exactly where price will go, then you're executing executing that trade. So we're going to do another example. So we are 2 by 2 so far, 10 by 10. Let's go to the next London Open, right? All right, we're looking at the time. Up over here, looking at the time is very, very important. Wow, look at this garbage. See, like, nothing.
New York session,
New York session?
right?
6, 7, 8, 9. See, now this is 9 a.m. Eastern. Yeah, we'll do next one. So we'll do next pre-London and then New York. Yeah, pre-London and New York. Oh, wow. Oh, wow, look at that. Came back down. All right. So we're going to 10, what the I think I took this trade. I remember this one. Anyway. 10 a.m. we are going. 9. All right, 10 a.m. So notice how I didn't even care what happened before my time to trade. I don't care. Whatever happens before my time to trade, I literally don't look at it. I don't think about it. Like it's not in my thing. I know, and my family knows that me, Raja, is going to be busy from pre-London and London Open, so no one comes to bother me. Right, so here we are. We have, obviously, we need to identify a support, and support is easily identified right over here. Right? No, yeah, that's resistance. Support identified right over here. Right, and then I think the next support, okay. Well, resistance, I'm sorry, is identified right over here. Now what do we know? Can someone explain to me or give me, let me make it a little bit bigger. Can we make it bigger? No, anyway. So can someone explain to me, in what circumstance can we look for a buy?
The next candle closes once it's broken above.
Okay, yeah. Yeah. If the next candle breaks above or closes above, then there's an opportunity for a buy. And this buy, we have a range of, measuring range is the most important thing. This is a 34 pip range. You know, pretty good range for a buy. Awesome, no problem. Now, let's take a look at what sort of information do we have for potential sells. Let's take a look to the left-hand side. Yeah, sells honestly are going to be a little bit difficult because if we break below this low, then we have another support down over here. You know, so we would want volume to break, but I don't know, we'll see. For sells, we'll see once the candle does come down to this support area, how it closes, right? How it forward this candle, see how it closes. Pause it, forward. Oh wow, look at that. Look at the way the candle closed right over here. Like, look, nothing. Small bodies, nothing. Absolutely nothing. Now, if we have a candle that closes bullish, I think there's a probability to take a buy, but yeah, too risky. So far, there's nothing. Wow, look at that. Oh, nice. This is what we want. We want the candle to break and close above this area so we can take a potential buy. Look at that. Right? The candle is about to close. Boom. Now, what's going on over here? Huh? Rejection. Because the wick is way bigger than the body. Right? So there's no buys. Because that candle closed bullish. It also closed above this range, but it's a rejection. You know, it's a rejection. So can't take a buy.
Most of the time, you took the trade after the second candle, after the small movie, and then when it broke the high, then you took the candle.
Yeah.
Yeah, most of the time.
Yes, exactly.
So why are we
Because we are not doing impulse entries, we are waiting for candles to close. The first step is to get really good at waiting to see how candles close and executing on those candle closes. That's the first step. Impulse entry, then they come later on. Because, impulse entries for me, they came from the fact of, let's say if I'm waiting for the candle to close and sometimes the candle just fucking starts to go up, right? And I miss the trade. And then I say, I was waiting for the candle to close and the candles just moved and I missed out on the trade. Then I start to look at that. I start to investigate that, okay, if candle has moved, how could I have been in that trade? And then this concept of impulse entries came. That, okay, maybe I could have entered as an impulse right over here to ride this move, then I lost a bit, and then I went back and said, okay, what did I do wrong? How could I have had this impulse entry even better? So it took me about 4 to 6 months to perfect sort of these impulse entries. It wasn't like every day I was doing impulse entries. I was just watching. Sometimes I would execute based on what I saw last week or last month. So right now, there's nothing happening so far. Yeah, just waiting. Just waiting to see if we're going to give some sort of confirmation. So, yeah. We'll see if we will move up or down. The candle is about to close. Let's forward to the next candle. Oh, look at that. Next candle, rejection. Nothing happening at this point. Still ranging. I guess we're going to move into New York session by the way it looks, right? I mean, nothing. There's no confirmation because there's this support, can take a sell over here, but there's this support, there's this rejection. Very risky, very, very risky. So we're going to let this candle form and then we'll see how the candle closes. The candle's about to close, the 30-minute candle. We're closing below the support area. Okay, see? Here, there was no confirmation to take a sell. There was no confirmation. So we just got to wait. Waiting around. Now that's good. We have broken below support, which is good. If we can get some sort of a rejection from up over here, then we can continue to move down. No, okay, we're coming up now. We are coming up. So we shall see. Candle is about to close in 10 simulation minutes. And we are closing bearish for potential sell. Look at that, right? Great opportunity to take a sell. What's this range? We are also in pre-London time. 1, 2, 3, 4. Yeah, almost closer to pre-London time. This is it's a 16 pip range. Yeah, it's a 16 pip range. Let's take a look to the left-hand side. Yeah, look at that. It's right there. 16, 17 pip range, minus spread. Not enough range. Who thinks the next candle can form bearish? I think it can form bearish. We're bearish, we can form bearish. But now the next question is, first one was, do I think it can finish bearish? I'm like, okay, yes, perfect. Second, I need to ask myself is, if it's going to finish bearish, do we have enough range for this candle? Right? So if I measure the range, this is a 16 pip range. So my second confirmation is not there, the range is not there. Even though the price can move down, but do I have enough range? I don't have enough range. So if I think I'm a good trader, I need to have a bigger range to even execute. So for this reason, I don't think it's going to be a good idea to execute because there's not enough range. Oh wow, look at that. It's moving up over here. So this means Now this, oh shit, hold on, pause this. So, so now what happens to this zone right here? Now we can remove this zone, right? Because now look, just look what happened, right? The candle moved up. We were in no trades, right? The candle moved up. This candle ignored this zone. This candle ignored this zone. This candle even ignored this zone right over here. So what happened? Maybe this candle is creating a clean range for some possible move somewhere later, whatever, right? So now we have to do a new analysis, reanalysis now, right? So maybe this zone, we can bring it down over here, which now it makes sense, right? And I don't even know what to do with this one. So we're just going to wait. Yeah, we're just going to wait now. 2, 3, 4, 5. So slowly we're moving into pre-New York session. So this candle is forming now, and this one right here is going to close in about 10 simulation minutes. Wow. Okay. Now we've come up over here. Some good has to come out of this. We've missed all these candles. Someone on Instagram has taken this by. And everyone else is thinking how. but we have to see. Candles forming, we got 10 simulation minutes left. And it's going to close in 3, 2, 1 right there. Now take a look at this range right over here. So we have created resistance right here, and now we have all this range. This is something that I can understand. We got like a 54 pip range over here now, right? And the stop loss is going to be 24, 25 pips. So I'm going to reduce my lot size because now the stop loss is bigger. And this now makes sense because we have clean range over here, we've created resistance, 3, 4, 5, 6, we're in pre-New York volume time. So let's reduce the stop loss over here. Reduce it to, let's do 0.7. Sell. We'll have our, okay, let's do this right over here. We will have our stop loss right up over here. And TP, I don't know. Can we go in the middle of a range at this point? How many pips is this? 43, 42? Yeah, good thing we have a bigger range over here, so. Yeah. Let's see here now. Because the stop loss was too big. Stop loss was too big, which is why the lot size was reduced. Yeah, I have a pretty good trade idea running here, but Caesar is not paying attention. But it's okay. Oh, nice. So let's take a look at this right here. So we missed all this move. We missed all this because there was no confirmation. If we knew about impulse entries, then obviously there was some way to enter this trade. But we are basically new. We just studied risk management, and risk management was wait for the candles to form, wait for the candles to create, and just wait. Waited through all this here, then waited through all this here, and then we created resistance. Created resistance. We know we had range, right? We know that our stop loss was a little bit bigger, but we had a solution for that as well. And the solution was to reduce lot size. You know, we reduced lot size, our risk was like $160, same thing like 1.5% or whatever. Entered the trade and price came down and, you know, had another winning trade. $300 over here, 43 pips. So, any issues here?
Would that have been risky because that bearish candle is not bigger than the bullish one?
No, because it's still a solid candle. The issue we had over there was that candle was also smaller, but also there was a big exhaustion wick too, right? This candle here, this has a wick. Yeah, this has a wick right over here, but it has little to no wick on the top. So if a candle has little to no wick on the top, this means that there's a higher probability for the next candle to move down, and also, like, if it has little to no wick on the top, this means it didn't even attempt to go up. It formed, it just peaked up and went down. So then you had resistance, clean range, and it was like, it would have been a sin not to basically execute a sell.
And there's no wick at the top.
What's that?
If there's no wick at the top.
Yeah, there's no wick on the top either
For this one.
for this one. Yeah.
There's no wick on the grey one?
Oh no, he's talking about this one. This one? Yeah, exactly. So I guess pre-New York volume came and we continue to push down.
So now the difference between the difference between our first scenario, first trade, it was also similar, right? But that time we told the stop loss is high.
Hold on. My memory is very bad. Let me take a look at that.
First trade, then when I asked why we didn't take
Yeah, this
the
one.
second one, no, before that, why didn't we take sell on the second bearish candle?
Oh, this one?
Yeah, we told that stop loss was very big.
Very big.
But same scenario happens here, right?
Yeah, but stop loss was, because but also this candle was also very big. This is also very big, because on that trade, there was a lot of volume. And the range was for like 45, 50 pip range. Right here, the volume was low. But this candle was way too big. It's a big, huge one. Right? Even though the stops are the same, but you got to look at the candle. Right? Here the stop was, let's say, 23 pips, but the candle is way too big. Because the move that we had up over here, one candle corrected this whole move down. Right? But in this scenario, right over here, we had this huge range right here. Right? So it was, the size of the candle is proportional to the range. And there was a lot of volume here too. So we have, okay. Okay, let's go to the next one here. Oh, wow. Let's continue to move down over here. 10 a.m. So wild to see these candles move. All right, let's do this. One, three. Okay. Here we are at 1 a.m. Eastern, pre-London time. So the first thing we have to identify is support and resistance, right? Simple. So our support is probably going to be this one right here, because I think this is a wick right here. We got a support. Yeah, I think it should be good support. And then resistance is probably going to be right over here. Right? So if we do break above, let's say, this resistance, our range, right? So now we got to identify, whenever you have identified your support and resistance, you have to identify, if we break resistance, where is price most likely to go if we break resistance? So in this case, if we break resistance, price is most likely to go bullish. And if we measure, this is a 32 pip range. Simple. If
Support for the small bearish candle.
this one?
Yeah.
Where?
Under below the bearish candle.
What? This one. This one. Yes, so basically, okay. So what you're saying is this is support right here, right? Okay, yeah, makes sense. But if we do break this support, how far is the next support? Right there. So it doesn't make any sense, right? So that's why I brought it right down over here. Because if we break this support, then we have this, these wicks here to the left-hand side. These wicks here to the left-hand side, and with volume, we can probably break these wicks, and price can probably continue down towards, you know, this wick here, which is 35 pips or whatever. So at this point, we're going to do is we're just going to let it run. Again, simple things. We'll wait for candles to close. That's it. That's our job. Our job is to just wait for candles to close and then try to see if we can make some money out of it. So this candle is forming. It's 7 minutes in right now. Yeah, let's just wait. All right. This candle is about to close in 7 simulation minutes. See, nothing. Just ranging at this point. We're coming up towards our resistance area. This candle is about to close right here. Right? The candle has closed. So far, we don't know where price is going, what's happening at this point. So now we'll have to wait till we reach this area, or if we break above this area, and like whatever happens, we can do nothing about it. So we'll just have to wait some more. Like, there's going to be a lot of waiting around over here. Yeah, we need to break above this area. If we, oh, it looks like we are rejecting it. Yeah, so sometimes, you know, price does these things where we just consolidate. We're still in 11, we're still 30 minutes before London Open. You can see the time at the top. We still have time left. Oh wow, look at that. Let's forward this candle. Oh, we're still in a range. Oh, so this candle broke below this area and then it came back. Forward candle, nothing. Still consolidating. Oh, there we go. Now, let's take a look at this candle right here. Who knows about candles? So all this time that I was forwarding candles, we were basically just waiting, right? So who knows about candles with no wicks? Like, let's say this candle right here formed now. This candle has no wick at the bottom. Yeah, so whenever you have a candle that closes with no wick, that means there's a 50-50 probability that the next candle we're going to continue to push up or down. You know, because essentially, when you have a candle that has a wick, let's say, well, this was an exhaustion wick, but let's say if a candle has a wick, this means that the next candle has some sort of an idea where to go. You know, but since this candle closed with no wick at the bottom, this means that the next candle has no idea whether to go down or up. Because a wick on the candle are like breadcrumbs, you know, which is where the term wick fill came from. Wick fills, you know, when a candle has a wick, there's a high probability that the next candle can fill that wick. Like right here, this candle has a wick, next candle came down to fill this wick. This candle has a wick, this candle came down to partially fill the wick, whatever. But this one right here, this has no wick at the bottom. So there's a 50-50 probability whether it's going to go up or down. So if this candle had a wick, then sells would make sense. Right? But yeah, let's play what happens. Still going to be tough. I mean, if we are correct about the 50-50 probability, then we shouldn't really go down. I mean, the candle, I mean, it's only been 10 minutes here now. Yeah, the candle is about to close in 9 minutes. And then we shall see whether we will go up. Oh, look at that. See that? Candle went right back up. So now we can adjust our zone. Make sense? I moved the line slowly to make sense. Okay. All right. So now we're just waiting. Now we have the support. If we break below the support, then there's a high probability of price to go down. If we kind of, now we're just ranging at this point now. This is just range. We're just waiting here now. Look at that. Nothing happening. 3, 4, 5, 6. This is pre-New York now. So if you look at the consolidation, you have to tell yourself a story. You have to tell yourself a story that, okay, was there volume in Asian session? Taking a look at this, absolutely not, because we're ranging. Was there volume at pre-London? Looking at this, absolutely not. Volume means candles moving one way, either up or down. Then you look at London Open. Was there volume? There was no volume, right? So there were 3 sessions of no volume. So when you have 3 sessions of no volume, the 4th session coming up is pre-New York. The probability of price having volume in that time, it increases. So that's what you're telling yourself, that okay, if you're trading a pair like gold, gold is a pair that's supposed to run, either bullish or bearish, but it hasn't done that here. It did it right down over here, but right now it's just nothing. So that's the anticipation. That okay, we're moving in pre-New York, so maybe in pre-New York we may have some sort of move happen, so we're just waiting at this point now. This candle is about to close, boom, candle has closed, and this looks like nothing. So we're just waiting. Yeah, this candle is going to close over here as well. 3, 2, 1, boom, look at the way the candle closed. So the candle closed with no wick, again at support. See how fun it is to just wait? Every candle is real 30 minutes. But here, every candle is a few seconds. But in reality, it's 30 fucking minutes, man. It's a long time. 30 minutes watching the candle, overthinking, buy here, sell here, buy here, sell here. And, that's why when I do the live streams, I start to roast people sometimes. They're just bored waiting. What are you going to do? Yeah, just bored waiting. So yeah, the candle closed with no wick at the bottom. So what are you going to do at this point? Nothing. We're looking for a sign. We're looking for price to break and close. Oh, look at that. Okay, so the candle is about to close. Look at the time. 4, 5, 6, 7. This is still pre-New York. Candle is about to close. 3, 2, and 1. See that candle closed. Right? Candle broke. Candle broke and closed below support. Right? So now, with volume, breaking, closing below support, what's the probability that the next candle will go down versus shooting right back up? Higher to go down. Right? That's all what you got to tell yourself. That, okay, just close your eyes and say, okay, I see this is a situation. What's the probability of candle to go up or down? Then this voice in your mind will say it will go down. Then there's going to be another voice coming in from the other side. It's going to say, but we have this, but we have that. And then you got to say, okay, you know what? That's okay. So when that happens, just reduce your risk. Let's say we reduce our risk to 0.5 lots. Not 1 lot, 0.5 lots. And then sell right here. Because this we're selling because there's a voice in our head telling us, hey, but. Even though we have straight confirmations right there. And we measured the range as well, down till, I think it was till this wick, whatever. Yeah, so if this candle goes up, we lose. Obviously, we have a stop loss, and then we can manage risk. But if it goes down, then we win. Because we broke and closed below support. Wow, look at that. This candle. So, okay, so what I'm going to do here now is, I want to, actually I can't do that on the simulator. I wanted to do close partials and then let the rest run. Can we do that? No, we can't do that. We can't, anyway. Yeah. Right, so literally just waited through all this. There was no confirmation here for nothing. Oh wow, look at that. Looks like we're going to fill this whole range over there. So there was no confirmation for nothing at all until we had, the fuck? Yeah, it was news. It was news. So, wow, came back all the way down. What was this? Oh, 44 pips. Yeah, so only one confirmation was there for price to candle broke and closed below, and then we basically continued to move down. So how many trades we took? 4 trades. 1, 2, 3, 4 trades, $800, around 8%. What happened over here? Oh, okay. Yeah, let's take a look at the trade statistics. Short trades, long trades. Wow, give all the information right here. Let's get the equity curve over here. History, yeah. It's pretty good. 18 pips, 17, 43, 29. Right, so every trade was basically just waiting for candles to close. Like, let's take a look at this one right here. Right, so we're going to recap this at this point. Take a look at this. So this one trade, $10,000 account, was $182. This candle broke and closed below support. Clean range, sell. This is the same as, what was this one? Okay, this one was when we created resistance. We created resistance. This one was also, we created resistance up over there, clean range. The last trade we took was the same as the first one. Candle broke and closed below support, clean range, and down. Right, but this one was the most amount of weight. This one, the weight started from pre-London and went all the way till half an hour before New York opened. But we didn't know that. Like, the only way we knew when candle broke and closed below support. Yeah. So, any questions on these right here? So the main idea has always been to kind of like wait for confirmations. You have to wait for confirmations. You have to wait for candles to print in a way that you can recognize. You know, if you can recognize a pattern, you can recognize the way the candles are forming or whatever, then you're like, okay, this is a trade for me to take. You know, like me, I started to learn Jiu-Jitsu. I knew basics from videos and this and that, but then actual practice, a situation came where I'm like, oh yeah, I don't know what's happening. So I tap my partner, I'm like, bro, I have no idea what to do. he's like, yeah, you should probably come to the other classes. No, I'm like, okay. But anyway, right, you have to understand how the candles are printing. Because every way they're going to print in a way that you'll be able to recognize, man, like I've seen this before, or I've seen this in a training or a live stream or wherever. And then you're going to be able to execute with much more confidence. Very important. Waiting. So any questions about anything? Love, life, whatever? Anything? Yeah.
When that report broke out, that they were consolidation,
Yeah.
then when it broke out, when do you know when you did extend the consolidation area or if it's a breakout?
Oh, hold on. So what you're saying is when this candle broke out.
Yes.
Yeah, so this candle broke out, okay? Perfect. Candle broke out, no wick at the bottom. right? So if I see a candle that closes with no wick at the bottom, you're going to write this down. When a candle closes with no wick at the bottom or no wick at the top, and if I say, oh yeah, I'm going to take a sell, I have learnt with being an idiot that this has a 50-50 chance that it will go in my favor. So when this happened, I'm like, yeah, I'm not going to take this sell because there's a 50-50 chance. It will go up or it will go down. You know, as a trader, you're not supposed to execute on a 50-50 chance. You're supposed to execute when the probability is skewed in your favor. Right? So when you had this candle right here, let me move this. So, right? Okay, so this candle went back in the range and you can say, okay, this was a fake out. But essentially, that also becomes now our support because it's a 30-minute time frame. Important time frame. Then you had the candle broke and closed below support with the wick on the top and there's a wick in the bottom and there's clean range we discussed with range. And that's where I'm like, okay, you know what? There's a higher chance for a sell rather than a buy. So in this case, the sells were in my favor. So that's when I executed. So as a trader, as a mature trader, you're always looking to see if the desired outcome is in your favor or not. For me to trade 50 lots, okay, for me to trade 50 lots, I need a balance of $20,000. For me to trade 50 lots. Yeah, so if I go to my 1 to 100 leverage account, this one right here, is this 1 to 100 leverage? Yeah, it should be 1 to 100 leverage. Anyway, let's take a look at this over here. Yeah, see, so here, for me to trade 50 lots, I need $100,000. That's basically what leverage is. Right? So if you have a higher leverage, you can risk a lot. You can make a lot, but you can lose a lot too. You know, but if you have a lower leverage, you're basically safe because then you can't lose a lot. But you will make based on your percentage. Like a lot of people don't understand, like having a high leverage is a double-edged sword. Like, because if price can move really quick, let's say you have a higher lot than expected, and something happens, your stops get slipped, right? Or your spreads widen up. Then you can have a margin call. Right? You have a margin call, and then you're going to be mad at whoever, and then you send an email to broker, hey, you margin call me, blah, 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 blah. And then our support staff will look at the account and they'll say, oh, well, you were over leveraged. Here's an article, make sure you follow the risk next time. And then they get even more mad. Like, what the fuck? You're trying to teach me? Yeah, it's hilarious. Like our support emails are just hilarious sometimes. Why did it get slipped on news? Well, it's news. You know? Yeah, hilarious. Any? Yes.
What's the best way to scale up an account? Now, for example, you make like 8%, right? 10K, 8%. I think you also did a video there. There's a way to scale up the account.
Yeah.
After certain periods, so you can more please.
The best way to scale the account is having confidence over time, right? So let's say you start a $500 account. You start a $500 account, and then you grow that account from 500, let's say you're trading 0.05 lots, 10-cent lots. From 500, you get it to, let's say, 600, 700, right? Now, the strategies you use to bring it from 500 to 600, let's say you've kept them consistent, right? So now, along this time, let's say you've taken 10, 15 trades. Out of those 10, 15 trades, maybe 7, 8 were profitable, but they were the same candle formations. What's going to happen now is you're going to see the same candle formation and you're going to say, okay, you know what? I've been using 0.05. I've grown it this much. I've seen this before and this is happening now again. Let me use a higher lot size. So that's how you slowly scale the account. Let me use a higher lot size on this setup. And normally, what happens when we use a higher lot size? Yeah, we lose the trade, right? We lose the trade. So when you lose the trade with the higher lot size, now you're going to go back to a smaller lot size, and what happens? You win the trade, right? But your loss is bigger than the win you had, right? So psychologically, If you lose the trade on higher lot size, keep the lot size the same. Don't reduce it again. Keep the lot size the same, but now the challenge is that you have to do the exact strategy, exact candle formation, the exact way the candles are forming below support or above resistance, and execute just on that. But with, like, slowly you start to increase your lot size, but the worst thing you can do is decrease it after a loss you have on a higher lot size. Don't do that. I've done that a lot of times. Yeah. This one time I was trading like 5 lots. I was trading 5 lots, and then, like moving to 10 was like the dream at that point. Oh, I'm gonna go to 10. Was trading 5 lots, we're doing well, and then this one day I tried 10 lots. My stop loss was 15 pips. Of course, price retraced, lost 1,500. And then I reduced my lot size. Went back to 5 lots and had a 25 pip win, right? 25 pip win on a 5 lot is almost like 2,000, something like that. But then I kept thinking that, okay, if I would have kept the same lot size, I would have covered the loss and would have made more. But then I decided, maybe that was a confidence issue, or there was some sort of, I was afraid that, I might have a loss again. But then I realized, every move in the market is completely independent of the previous move. Sometimes we get afraid of, someone will say, oh no man, I can't trade gold, I'm afraid of gold. Like Caesar, he's afraid of gold, because gold fucked him. He's a man afraid of gold. Yeah, but that's the thing. You gotta get comfortable with it, and if you know how to manage risk, the fear goes away, because you're like, okay, even if I'm gonna increase my lot size, let's say one trade you increase your lot size, you know that even if it's going to be a loss, I know how to manage my risk. Like if, let's say you're moving from 2 lots to 5 lots, right? Now your 10 pip stop loss is what, like $500? 10 pip by 5, $500, right? And if you know for sure that if you use this 5 lot, you're going to aim to lose less than 500, then you're going to be fine. You say, okay, you know what, even if this trade is a loss, and I can close this trade at a $300 loss or a $350 loss, that's better than losing 500. Right? Then you're going to be fine. Okay, you know what, I'm going to increase my lot size as long as I know how to manage risk. That's why we did risk management in the start, because you should know how to cut your losses short. So later on, what we're going to do is I have all your emails, so we're going to add you to a small database we have. Yeah, it's an online webinar, stuff like that.
So, how often do you suggest people to do simulations, and do you think that over-simulated is going to affect my patient?
Yeah, I say maybe do simulation sessions once or twice a week. Saturday, Sunday, do simulation sessions.
We should not take more trades in one city.
Yeah, exactly. I usually simulate 1 week. That's it. 1 week is like 4 trades. Like here, we did 1 week, it was like 4 or 5 trades. That's it, finish. Whether a win or a loss. One good thing about C-Trader is that you'll see exactly where you took the trade, and even if in simulation it was a loss, you can look at it and say, okay, maybe I could have done this, or I could have done this, or managed risk this way. So
Better to have kind of checklist, like prepared
yeah,
beforehand, so that we can analyze, okay, now we can take a trade.
that's true.
But I'm trying to make what I'm not able to.
Checklist is simple. Checklist is this. Okay, let's do a checklist stuff here. Checklist is simple. So what's this time frame? It's a 30-minute time frame, right? So let's zoom in. Gold is at the highest of the highs. So let's zoom in over here. Boom, boom. Why am I booming? Let's do boom. One boom over here. What's this? Yeah, there we go. Bring it down. Boom. Another boom. Yeah, so now you have this. Checklist is simple. First, checklist, identify resistance, right? Identifying resistance, easy. We have, okay, hold on. We have resistance right here. boom, resistance, perfect. Now we need to identify some sort of support. And the support is going to be maybe over here. Let me take a look at this. No, let us take a look at this. Okay, perfect. So this is resistance. This was maybe our support right here, because look, a support is formed when you have a bullish candle forming after a bearish candle. Support is formed. So it looks like at market close, this candle was trying to break down. Let's take a look at this on the 15-minute time frame. Okay, yeah, that was a support on the 15-minute time frame. Up over here at resistance, it's whatever, so we're going to stick to 30-minute. And yeah, that's it. That's it. Now you just got to wait for your session.
Make sure no wick fill.
Excuse me?
Candle should have a wick.
Yes, this candle has no wick because the candle closed when the market was basically ending, closing. You know, so that's why. So yeah, now we'll have to wait, because if we do break below, oh man, look at this range here. This will get corrected. It's a huge range. Super excited next week. Because all this range, I'm excited because it's money. A lot of money here. Because look at it this way, right? Every 1 minute candle that moves, there are billions of dollars moving in one 1 minute candle. Billions of dollars. Every time price changes, there's billions moving. You know, we're just scratching the surface with our tiny 1 lots, 2 lots, 0.1 lots, whatever. You know, we're just scratching the surface. That's it. That's all what we're doing. So yeah, this whole range is pretty good. I wanna look at the current range we are in. This range is 35 pip range. I don't know. We'll have to wait to see how, how the market opens, and then, yeah. Checklist is also like if the candle closes below support, yeah, above resistance, perfect. But in the beginning, I would advise, like we have some new guys here too, I would advise to not to trade in the beginning. Just watch. That's it. You just gotta just watch. I used to work with there was a guy, and the way, so this was a sales guys, right? Sales guys. And his biggest pet peeve was that his sales office had all men. They were all men. And he's like, the biggest problem men have is they don't know how to do a proper handshake. You know, you do a proper handshake, and then that's where half the deal is already done, because the other person knows that, handshake means a lot. So what this guy would do is for 2 weeks, he would just have guys do handshakes and read scripts. That's it. And anyone would say, oh, we want to go in the field, we want to go in the field. He's like, no, that's not what you got to do. You just got to watch, listen, do handshakes, that's it. You know, so here it's the same thing. Just look at price action for 2 weeks, a month. Just see how it's moving during your session time. You know, if you're trading London session, just watch. You're trading New York session, just watch, see what's happening, how's it going, and then that's it. And then slowly you'll get comfortable, you'll get confidence. Slowly you're going to be able to see that, okay, I think it's going to go down, it's going to go down. Then you'll say, okay, it's going to go down to this certain level. And miraculously, it's going to go to that level, and you'll say, ah, yes. And someone who's with you, he'll say, how'd you know? How'd you know it's going to go over there? Then you'll say, oh, dummy, look, we have clean range and closing below support. It had to go over there. You know, so it just takes time. It takes time, a lot of watching, learning. It's like, you're basically watching paint dry. It's boring, but very exciting. I legit tried learning. I went through the first 4 hours of videos, and then there were like 40 some more hours. I'm like, what the fuck? And then I stopped. To me, it was just like way too much studying, way too much tasks. I'm like, okay, you know what? I'm just going to take a look at the candles, because if the candles are moving, and if you're making money from candles, then this is all what I got to look at. And I told myself, okay, you know what? If I'm going to focus on, so this is how I explained to myself that, okay, if I'm working a job, this is when I was back in Canada. If I'm working a job in Canada, my average daily pay is around somewhere from $85 to $110 a day, right? And I'm like, okay, in trading, if I use a 1 lot, and on 10 pips, I can make $100. You know, I'm like, okay, perfect. This seems much better than having a job, you know, but it wasn't obviously in the beginning. So then I say, okay, then I start to look at which candles move more than 10 pips. So I figured out, okay, 30-minute candles and 1 hour candles move more than 10, 15 pips, right? I mean, it's right there. And that's it. And I'm like, okay, you know what? I'm just going to focus on the 30-minute and the 1 hour. And my aim is to have a profitable 30-minute, one 30-minute candle. That's it. All I need. One 30-minute candle or one 1 hour candle. That's all what I need to trade on. That's all what I need to manage risk on. And that's it. Kept it very simple. Just started looking at the 30-minute candles and started to kind of like, you know, drawing them how I want them to look. In some live streams, we would draw the candles and the candle would print exactly the way we would draw, because we just kept, literally just looked at the candles, how they're forming in different times of the day, different sessions, you know. Some days when you have news, you'll see price just ranges. Then you know, okay, the reason why we're ranging is because there's news coming up. So you can learn a lot by just watching, analyzing, you know, like spectating,